Sup traders, let's see the price action on euro dollar last week and how I was able to profit off that. So we took out this buy side liquidity 3 weeks ago. Just because we took out the buy side liquidity doesn't mean we're going to come down and take out, into this fair value gap, which was my drawn liquidity going into this week. This bullish fair value gap was where I was expecting price to come into. Especially one of the main reasons was, right, we're putting this inside buy candle after closing above this resistance level. A strong sharp close up inside bar candle. Was predicting price to come out and take out that inside bar, push up, didn't. And then now going into this week or last week, I was expecting price to come down to that low. By low, I mean this bullish fair value gap, and on the daily time frame is clearer because it is a low. So this week, let's see what happened. Took out that buy side liquidity last 3 weeks ago. You would expect price to come down to this bullish fair value gap, or price to continue higher up. One of the reasons I was expecting price to come into that bit bullish fair value gap was because we displaced lower, put in this bearish fair value gap, and it looked like we were going to hold it, but we didn't. We put in this bullish candle, and after seeing that, I was expecting price to continue higher. Again, it didn't, and then we saw this displacement with a microstructure shift right here, and also displacement with bearish fair value gap on the daily time frame right there. So that's a very good confluence, that price failing to go up, push up after this bullish candle and closing above this bearish fair value gap and this inverse fair value gap, and then displacing lower with microstructure shift and a bearish fair value gap. I was expecting price to find resistance at this level during NFP, which is this candle right here, and then continue lower. We didn't continue lower on Friday, so I was expecting price to continue down on Monday. We didn't, and I did take a short at the 50% level on this fair value gap on Monday, which price I took out, I took 1% off somewhere. I believe I put my stops above these highs. I took half a trade off somewhere around here, and then I let the other one to go to break even, and then we got this bullish engulfing liquidity candle that took out low of that, and also came into the open and found support. And now, expecting price to continue higher, but because it is NFP day, FOMC day, sorry, not NFP day, on Wednesday, I was expecting price to give me something on Wednesday, so I waited until Wednesday to go short. Like I said, my drawn liquidity is this weekly time frame value gap, which also happens to be at the sell side liquidity on the daily time frame, so a lot of liquidity at that level. And after seeing this price action of price failing to close up, displace lower, microstructure shift, I'm expecting price to come down into this zone around here. So, and I'm just playing that throughout the week. So yeah, initial trade I took on Monday was after this high. We had this accumulation during London session, perfectly reasonable, or just it's a perfect order. Perfect price action that I want to see, accumulation and then manipulation. I took a short here. I then took out target ones below this low. Price came into that open gap and then pushed up. I'm still not worried. I'm still expecting price to continue lower. It's just I don't know when it's going to do that. So I took another short on Tuesday, I believe. Somewhere around here at first after price rejected these highs, and then another one somewhere around here. I exited the first trade, and then the second trade, I believe, I moved my stop to break even somewhere around after price reached down to these lows. Again, this was a break even that day as well. So, and on Wednesday, I didn't really want to trade because it is NFP day, and I would much rather wait to see what price does before I make any decision. So, NFP day, this is the NFP FOMC day. This is the FOMC candle. This is how price reacted, right, on the 1 hour time frame. FOMC day price opened up. London session, it looked like price closed above this bearish fair value gap, and it looked like it was going to continue higher up, right? So I didn't want to do anything because I know price wants to go lower, but price action is saying we might continue higher because we put in this, took our liquidity closed above this bearish fair value gap, turning into an inside inverse fair value gap. Came and rejected the, looks like we're going to continue higher, but after price failed to make it high and then closed down, right, with these candles, to me now it's even more clear that we're going to continue lower into that fair value gap on the weekly time frame. And I'm just waiting for FOMC to come out at 7 p.m. I believe UK time, and then perfect, right, we had this market structure shift on this 15-minute time frame, closed below that bearish fair value gap that turned into an inverse fair value gap, and now it's turned into a bearish fair value gap again. Came into these fair value gaps on the 15-minute, and then I entered somewhere around here. That was one trade, and I exited at this this open gap. This was a good trade. This happened during the night, but you know, this displacement lower, leaving a fair value gap, could have potentially traded on the 1 hour time frame, especially this pullback into the 618 or even 50% probably. And then price displays lower again. The London session on Thursday opened up like this, almost got a retest, pushed up into these fair value gaps, and then I took a short somewhere around here, and then yeah, those were my trades this week. But I think the better trade would have been waiting for this candle, which is a bearish engulfing liquidity candle after these, you know, inside bars and indecision candles at the open gap, and then taking a trade after this order block on the 15-minute time frame, right there, and then putting your stops up there. And I think that would have been a really good trade. Regardless, all the trades were good, and right now we've reached a drawn liquidity. I'm not gonna trade down here. I'm not gonna expect price to continue down to this low. It might do, it might not. I'm not sure. If it does come down to this low though, I would want to go long. We've got a channel forming on the 60-minute time frame, and then if it take out that low, that would be very good on a Monday, because I'm expecting this retail setup to play out, right? So we have a RSI divergence from here all the way up to here. This is essentially forming a channel. Some kind of a channel has been formed. We have a head and shoulder at the peak of that channel at a key resistance level, and we've just had interest rate on euro and pound reduced, whereas dollar has remained the same in the last month, which means dollar is going to get stronger. There's going to be more demand for dollar because it's going to have higher interest rate. It's already in a safe haven, right? Whenever there's shit happening everywhere, safe haven goes up. Dollar is already that, and it's always in demand. And now the fact that interest rate there is higher than other countries, I should, in theory, start to find some momentum. By it, I mean dollar should find some momentum, which means euro and pound should start to drop slightly. Not sure where to, but this is good. Next week I want to see how price reacts. Maybe it comes up here, takes out this high, and then we start to go lower. But that's for next week. This is just me going through this A+ price action that happened this week, and ideally I want to see these kind of price actions over and over again, because this is what I like to trade.